Welcome to Crypto Corner. These are the top headlines today. Chinese authorities crack down on Hyperliquid money laundering. Uber CEO has revealed that the company has interest in stablecoins as a solution to reduce the costs of cross-border payments. But first, why is the crypto market still down? Why everything is so red today on the charts? This is what we're going to discuss now. Let's get started. Alright guys, welcome to the episode. I'm your host OJ, crypto analyst and investor since 2016. It's my 10th year in this crypto space. So I've seen many dumps, and today is not exactly the worst of them. But of course, I checked my Twitter feed and everyone is kind of worried. Why is Bitcoin failing to sustain its gains? We saw it go to 111,000 earlier, just days ago, and then it dropped to 109, 107, 105. Yesterday we actually broke quite a, I would say, important support level at the 104, and we went all the way to the 100k to test support. And on the daily chart, this actually touched the 50th EMA, exponential moving average, which is a support. So it's important that we didn't break this support. If we zoom in, we can actually see that we dropped on the 12-hour chart. It actually dropped below the 89th moving average, which is coinciding with a Fibonacci level. That's why I'm using the 89th rather than the 100. But we very quickly managed to climb back above it. So right now, this 89th moving average is acting as a support on the 12-hour chart. On the daily chart, it is the 50th moving average that is acting as our support. So right now, we are doing a bit of a recovery, but we are seeing quite a lot of selling pressure around these levels. And on-chain data shows that many previous accumulation zones have now flipped into distribution zones, particularly those formed between 25k, 31k, and then 60k to 73k. These seasoned holders are shaping the current market structure, applying selling pressure that I personally see as the main reason why Bitcoin in the short term is actually failing to break through. Some cost basis models highlight immediate support near the 103 and all the way down to the 95k region, with resistance currently sitting at 114,000. The average entry price for short-term holders is now around 97,000, with wider bands defining the market's current sentiment range. A break of these levels could signal whether momentum is fading or reigniting. In short, Bitcoin's latest surge has now entered into a critical phase, I would say. We have a lot of profit taking around these levels, mainly from veteran investors who actually jumped at much lower rates. They are more than happy to offload above the 100k. And so we're seeing Bitcoin losing momentum, which could actually translate into a consolidation or even a top formation around here. Now, I don't really see any technical indicators that point towards a topping out already and hitting the top of the market, therefore going into a bear cycle from this point on. But we'll keep a close eye on the indicators, and I will update you in the next episodes, because of course we want to be ready. We want to know when it's the good time to sell. We do not want to be back holders during a long-term bear cycle. I don't feel the bear cycle has started, but as soon as I see signs, clear signs that we are entering a bear cycle, I will be posting here. So make sure to subscribe if you're new to this channel. Now, before I move on to the news, a quick word about a very cool app. Stuck in traffic? Doing laundry? Scrolling aimlessly again? Well, what if you can turn that time into learning time with Herdly, the AI-powered app that turns best-selling books into powerful 15-minute summaries that you can read or listen to or even watch. And you can choose from over 10,000 titles in more than 28 categories, from business to psychology, all available in 36 plus languages. They condense the best insights so you don't have to. We tend to read less and less nowadays, and one reason is that our attention span is much shorter. I can't really commit to a 5,000-page book anymore, but I do want to read it. I'm sure you can relate. This is why I like this app. Whether I've got 5 minutes before a meeting or 15 minutes on the treadmill, hardly fits my lifestyle perfectly and my learning goals. It's smart, simple, and always fresh with new content added every week. Just let AI work for you and level up. Now I can finally go through those complex philosophy and science books that I never had the patience for. So go check it out and use my discount code from the description below. Download Herdly on the App Store or visit herd.ly. Why just read one book a month when you can cover dozens, right? The link is in the description below and you get a discount with my code, so use it. Alright, now moving on with the news, and Hyperliquid is in the news today. Let's take a look at this article at the Cryptopolitan. Chinese authorities crack down on Hyperliquid money laundering is the headline. Chinese authorities have intercepted 3 cases of money laundering involving Hyperliquid leveraged positions, according to Miro Tang, founder of the Web3 security company Solus. Hyperliquid was ideal for creating a surface loss, which was then offset by counter-trading on centralized markets, they claim. Allegedly, the mechanism was similar to the trades of James Tang, who has been liquidated multiple times in the past 2 weeks. The authorities discovered the potential laundering during a period of constant growth of Hyperliquid trading volumes, reaching up to 50% of Binance's derivative market. And as we know, Binance has been the leader and has been the crypto giant ever since 2017. Millions and millions of users worldwide, and it is really available pretty much everywhere. And generally, decentralized exchanges never reach the type of volumes that centralized exchanges do, because of a variety of reasons. DeFi is not as popular as CeFi, and centralized exchanges still control 80% of the trading volumes across, all markets. So to have 50% of Binance's derivative market, it's a little bit shady, I must admit. Hyperliquid retains the ability to create big losses and gains, as it returned the 40x leverage with an on-chain trading. The perpetual DEX has been growing its influence on the crypto market, especially after the involvement of high-profile whales and the risky trader James Wynn. Now, James Wynn, if you're not familiar, is a trader who got really lucky trading meme coins, and he turned his investments into millions of dollars. At some point, he had over $100 million. Maybe even more than $100 million that he made from meme coins, and he didn't really know how to trade. I actually just bookmarked a few of his tweets on my X, because he just got liquidated for hundreds of millions of dollars. Most of his positions got wiped out because of reckless trading, mainly gambling and everything, but he was trading on Hyperliquid, one of the exchanges, and he continues to push his link to try and get people to join, and recover some of his losses. Right now, I think he only has Moonpig, which is a meme coin again, and unfortunately, Moonpig just dumped heavily as well. So I have a feeling that this guy is going to be completely liquidated very soon, and it's all because of gambling behavior. Perpetuals trading, futures trading, any kind of leverage trading, guys, is a pure gamble. And a lot of the times you're working against market makers, and market makers are controlling the platform that you're working on. Therefore, a lot of the times they can manipulate the price and liquidate high positions like his position. His latest position that got liquidated was $100 million. On top of that, the on-chain trading on Hyperliquid means all the large positions are transparent, and they can draw in counter traders. So you could actually have a lot of other people ganging up against you and trying to push the price lower so that you can get liquidated if you're long, or push the price higher if you're short, and then you can get liquidated. This also happens. So now the Chinese authorities are investigating, and they're trying to prove that there has been insider trading and market manipulation. In fact, there is an example here that Hyperliquid was used to short Trump tokens, and not just by users of the exchange, random people, but in fact, Recently, they say here in the article, the advisor of World Liberty Finance, which of course is the Trump company. So the advisor of World Liberty Fi opened a short position on official Trump after the asset started tanking in the past day. The advisor, known as Cryptogo, received a backlash from the community from seemingly showing disloyalty. He claimed World Liberty Fi and the Trump meme token were separate projects, and this could be true, but at the same time they're still linked to Trump. These are still people who talk to each other, these are still people who know each other, and people who were taking part in creation of the Trump token, if not the same, certainly know the people who are behind World Liberty Fi. So we are clearly having an example here of insider trading. In other news, the Uber CEO is now revealing that the company is researching and interested in stablecoins as a solution to reduce the costs of cross-border payments, which makes perfect sense. Now, this is by Atlas 21. The article claims that the multinational transport giant is currently in an exploratory phase regarding the integration of stablecoins into its global payment systems. I personally can't wait for this to happen because I'm using Uber all the time, especially when I travel and everything, and sometimes I can't actually link some of my crypto debit cards with the app. So if I'm actually able to just use stablecoins directly, that will be so much easier for me. As you know, 90% of my capital is in crypto, whether it's stablecoins, Bitcoin or altcoins, whatever it is. I keep very low amounts in my bank accounts and everything, so I would actually like to see something like that happen where I'm able to use directly my stablecoins and I don't have to worry about moving the money, swapping it into euro and all of that stuff. We're still in the study phase, the Uber CEO says, but stablecoin is one of the, for me, more interesting instantiations of crypto that has a practical benefit other than crypto as a store of value. The Uber CEO explained how stablecoins could represent a cost-effective alternative to traditional payment systems for international transactions. Implementing stablecoins could streamline Uber's global payment operations with particularly significant benefits in markets burdened by high remittance costs or unstable local currencies, enabling faster and more reliable payments to the company's business partners. However, Uber has yet to specify which stablecoins or blockchain networks it's going to adopt. And there is still no timeline for this to happen, but I will be keeping a close eye on this because, as I said, I'm really personally interested in using stablecoins directly in the Uber app. What do you think? Is this a good thing? Are you going to be using stablecoins with the Uber app, or are you going to continue just using your bank card? Let me know in the comments below. Well, this is everything for today's episode, guys. Thanks for staying until the end of the video. And if you're new to this channel, subscribe. I'm coming to you every week with alpha crypto content. And you can also join my newsletter. 10,000 people have already subscribed to the newsletter. I send it at the beginning of each month. I don't spam you with content. My newsletters are packed with information, market analysis, news, updates, things that you need to keep up to date with everything that's happening in the blockchain space so that you know how to navigate these markets. So you can scan the QR code or you can get the link from the description below. This is everything from me. Don't forget to get the discount code for the Herdly app from the description as well, and go check it out. And while you're here, just pick another one of my videos and I'll see you there.